We'll get going. This is the fourth webinar in a series of four. So this is our final one in this series. Today we're going to be talking about just owning real estate. A lot of this will be discussing primarily the real estate that your pharmacy might be in, but we are fortunate enough to have Claude, who is also done quite a bit of real estate investing outside of his pharmacy as well. So we will touch on that. If you don't know, I'm Owen Bondurant. I'm with Independent RX. We are a consulting firm that helps people start and buy pharmacies, sell pharmacies. We also have an entire accounting firm, all servicing independent pharmacies. Myself also, I own three pharmacies: a retail, compounding, and a long-term care. So I will pass it over. Greco, why don't you go ahead and introduce yourself here?
Sure. So my name is Greco de Valencia. I'm the Senior Loan Officer and Vice President of the Pharmacy Lending Vertical here at Live Oak Bank. I've been with the company for about 7.5 years now, and I've been in the pharmacy and healthcare space for probably almost 15 years now. And as Owen mentioned, Sacramento Kings fan. Kind of bummed out these days, but still happy to be here and talking about something that doesn't always get discussed with pharmacy owners, which is owning the real estate. So excited to talk about that.
Great. Thanks. Claude?
Yeah, again, thanks for having me. This is my second time coming to your webinar, Owen.
Yeah.
Appreciate it. So my name is Claude Condo. I'm a licensed pharmacist. I've been a pharmacist for almost 20 years. I own two retail pharmacy, and pharmacy is my first passion, but I've been always attracted to real estate as a passive income. So I started doing real estate probably like 15 years ago. And of course, I start with everyone else, residential, and now we do primary commercial. And last year, we launched our own company, a real estate investment company, where we help people, train people, educate people. We have our own podcast that we bring investors, lenders, and pharmacy owners just to, share their success, their mistakes, and lesson learned. So yeah, and I'm privileged to be here and share my mistakes and lessons I learned throughout my journey.
Yeah, it's great to have you. I'm really excited about this. And before we get kind of into the first topic here, there is a Q&A at the bottom. So if you have questions, we'll be answering along the way. Or save those for the end and try to answer as many as we can. So I guess I think the thing most on everyone's mind is just, the real estate market in general, right? It's been really good for, a long time. And, you read everything in the news about, oh, is it going to sustain and what's going to happen? Are we going to have a crash of 2007 again? And, interest rates are going up, doomsday, blah, blah, blah. So I think we need to address just real estate in general. I don't know if, Ricky, you want to provide some general thoughts there, or Claude?
Yeah, no, it's definitely, I think, with all the proliferation of information that's out there on our phones and news feeds, definitely you hear a lot about the real estate market. And I tend to not pay attention too much to the residential. I do pay attention more to the commercial. Although I can understand why some people, if you're just, out there seeing the news, the two can get combined. I think for us specifically with the commercial real estate, we do owner operator occupied lending. So for us, it's a lot of the individual that's owning the practice and then, essentially rent replacement. And we've seen those still be okay. But I think what a lot of the news and some of my other friends that might be in the lending space with commercial banks, there is definitely a concern as there's been high levels of vacancy in some of these larger commercial real estate transactions. I don't know how much that's going to really apply to, as I mentioned, in my space. lending to individuals who are owning the pharmacy and looking to own the real estate as well. But I can definitely understand where some people would be seeing that type of news or hearing about interest rates and can it compress valuations, and then have a concern. So hopefully we'll be able to kind of guide people through how that looks. And Claude, I'm sure you have a lot of insight into that more, vacant focused, where you have to focus on the tenants making up a lot of that real estate, and you could probably provide more guidance on what you're seeing in that area.
Yeah, for sure. No, like you said, it's just great to have a perspective from a lender, which is great. So our audience are in for a treat for sure. But on the real estate investor perspective, is actually this is one of the best moment. I know, I have to be. People will be losing their investment, unfortunately. Just like if you bought it in the highest last year, when if you did a type of bridge loan, we might go deeper, we might not, but some deep bridge loan that might be due, then the interest will reset, and then you're gonna have to pay high interest, right? But for you as an investor, for me as an investor, I just like how last year or a couple of years ago, the cap rate was so small, right? There was not really enough way to make money. Now these days, because the lending has tightened up a little bit, so there are more deals coming through, right? There is more, the cap rate is higher actually. So if I invest $100, I might get 8% cash on cash return, because the cap rate it's close to 8-9 cap rate. So as an investor, actually, when the market is changing, this is actually the perfect time to be in the game, if I can say, as long as the investment makes sense. I cannot stress that enough. Just do your due diligence, find out how am I going to get cash. Is it this tenant? Is my pharmacy can sustain this rent so I can pay my mortgage for the next 5 years, 6 years? Can I get a fixed interest so I can predict my income every single month? All those nuances when you do your underwriting, make sure that you understand the cash flow and how you're gonna make money on your investment, because you'll be paying rent to your own real estate, if you own the real estate. So
that created several questions in my mind. First off, Claude, well, actually both of yours did, so I'm going to start with you. I'm not sure the entire audience knows what a cap rate is. Can you maybe just say, okay, I don't know if you need to define it out of Wikipedia or anything, but what does that mean to you?
Yeah, so there's several measures you can check to look at an asset, a real estate asset. I'm pretty sure Breco will have even more detail than me. Then again, this is my personal opinion, my personal experience. But cap rate is capitalization rate, so it's based on NOI, which is net operating income of your real estate or business, divided by the asking price, right? So it goes by percentage. So let's say if I'm buying a building that is $100, and then the net operating income is $20, right? And then that's so my cap rate will be I have to do calculation quick. But so that's pretty much, so it's just how much I usually look at the cash on cash return. So if I put $20 on this $100 investment, how long will it take me? What's the percent I'm gonna get per month?
Yeah.
So if
How
I
long
can
does it take to get that money back? Yeah.
and then if I can get 8% cash on cash return, then I'm okay, right? Because I'm if I get 10%. So those are the basic calculations that I do, beside the IRR, which is a little bit advanced, but just cash on cash return is the basic one you can do on the paper, right? So
yeah, and the lower that cap rate, the worse, right?
the worst,
You
because
want
that's
that to be higher. Yeah.
yes.
Okay.
I would like to be a 9, 10, 11, 12 cap rate. Yes.
Right. And so I think a lot of people were worried about, just, am I buying this too high? Right. Am I buying it at the top of the market? And I guess it's kind of transmission me into just looking at the building as an investment, because what you're saying is you're really looking at the net income, right? And the bank is also kind of looking at that. So when you're looking at buying the property that your pharmacy is located in, I mean, it's really, does the investment make sense, right? You're already the tenant. So the whole thing with the economy, right, being a problem,
Yeah.
right, and like retail spaces going out, like you're the tenant. You may have one other tenant, but like you're the primary tenant in the thing. So I guess when we start looking at, should I buy the building I'm in, what are we thinking about there? I don't know who wants to. I'm sure you both have
Yeah,
opinions.
I'll add just one last point to a couple of things that Claude was
Oh,
talking about.
sure. Oh, great.
So, one is he was talking a lot about, that interest only period that a lot of, if you look at, I would say probably in the last 3 to 5 years, there's been some commercial lenders out there that have loaned on real estate
Yes.
where they're doing interest only on the, let's say 3 to 5 years, and then it adjusts or maybe balloons, because what they're looking at is, all right, I'm going to buy the property and I'm going to, this is the projections of where I'm going to get my tenants and my rates, right? Or this is where I'm going to get on a projection to fill the commercial real estate. I think the one of the big differences that I would say probably 75% of the pharmacy owners out there, the difference there is that, Owen, to your point, they're already paying rent to a landlord, and most of the pharmacies are 100% owned by the actual, occupied in square footage by the actual practice. And so, when you're looking at paying that rent, most of the time, the rent replacement, which we call in the space rent replacement, the mortgage that you're paying for the property, if you do it through an SBA loan, which can be up to 25 years, that rent replacement is going to make sense. So the pharmacy, if it's paying 10,000 in rent, assuming that, depending on where they are, that the price of the building, once it passes appraisal and agreed upon, that's a fair price, is usually going to replace that rent that they're already paying through. And so I think the benefit there is that, it's a difference between a projection base. So you're not going to have to be on an interest only with a balloon payment. And you kind of already know, hey, my pharmacy is generating this much net income, and my rent is already part of my expenses. If I purchase the property on a monthly mortgage payment, I already kind of feel like it's going to be within a realm of what I'm already paying as far as a percentage of rent to my expenses. So in that sense, I think there's a big advantage there, because you don't have to worry about that projection based. And also the lender is going to feel like Live Oak Bank, we're feeling more comfortable about those types of owner occupies versus if it's, really projection based. And if you're having to have a lot of occupancy spaces come up, not to say that those don't still have a place, but I just think from the lender's perspective of what we're doing for independent pharmacy owners, it is a little bit different in that way. And I always say, one of the things that I heard from an individual that owns real estate in their practices is the biggest thing is they control their own destiny. And that might have been a little bit of a product of where they were with the landlords that they were seeing. But I think when you own the property and the space, you do control your own destiny as a practice owner, to be able to build, to be able to, add in drive-throughs, and not always run the risk of being essentially evicted from the space, which we have seen happen to practice owners.
Yeah, and
Yeah.
I guess we see all the time that actually, like, let's say in that case where you're paying $10,000 in rent. I mean, in many cases, we see the mortgage, taxes, insurance being actually less than the 10,000. I mean, maybe that total 8. So now you've actually freed up $2,000 worth of cash per month, because you're not paying that to, if not more, to the landlord. And so now you have it. And then in addition to that, like Claude, I think you've added value, as Greco was saying, around some of these properties.
Yeah.
And I guess, he mentioned drive-through, but what other things have you seen there or thought about in terms of the properties and like your pharmacies in?
Yeah, so that's a great point. But usually, like we have to have the heart of an investor, right? So I own a pharmacy and then I own a real estate building that my pharmacy is, right? So
Yeah.
I need to look at that building, like what else can I add, right? What kind of improvement do I need to do, right, to make it even
Yeah.
better? Right? Do I need to add drive-through, like Greg was saying? Do I need to add to look at space, another space inside my pharmacy, maybe a 500 square footage? I can bring a nurse practitioner. Maybe I can do a telehealth services, right? Telehealth, I just put a computer there, sign a contract with a physician, just all those stuff. They'll pay you rent. It brings, food to your building. People are coming. And so those are the value add that someone can think, because sometimes we are so busy with pharmacy businesses, we forget to really look as a business owner, what else can I do on my building to kind of make it even more valuable, right? And then I can turn around and go to the bank and say my value has grown up. I used to have $10,000 of income from my pharmacy. Now I can add a nurse practitioner that will bring me another $3,000. So now all of a sudden I have $13,000 a month. So those are the value that you can bring and then increase the value of your building. Those are forced appreciation.
Yeah, I think what you're saying, is treating the building like a business. Because I
Yes.
mean, you're gonna have two different corporations, right?
Yes.
And I mean, you're gonna have two different corporations. So, I mean, they are two different businesses. And so we have to treat that building like that. And we've even seen people go, well, I've got a big front end and I don't make a lot of money off of that. So maybe I'll shrink my pharmacy, wall it off, and rent the other half over. Or
Yeah.
maybe I've just bought a piece of property that it sits on that I could build a whole nother building and go into complete commercial real estate because I've got all this property. So I do think you're right. That's probably the biggest mistake that we see, is trying to figure out, like, how do we treat that building like an investment and get the max out of the square feet. I mean, we've seen things like UPS stores, flower shops, liquor store. I mean, things to drive traffic and maybe have another business inside or what have you, but that owning that building allows you to do whatever it is that you want. Unfortunately, Greco lost power at his house, so he is figuring it out. He said he's gonna, so I apologize, everyone. But treating that as a business is so important. And I guess along those lines, it's just it is a business, so it also has tax implications and benefits.
Yes.
Right. So I think we have to understand, what is this, hey, I bought this building, it's saving me $2,000 a month, but also I can both leverage that and improve my tax situation. So I don't know if you want to maybe just give a high level. Now, I want to be clear, Claude is not a CPA.
That's right.
But he is an investor and he's actually seen this work for him. So, maybe you want to give some insight on how you've both leveraged the investment in the building, but also found some tax benefit.
Yeah, if you don't mind, if you just can go back to, like, let's say if you have a pharmacy and you're looking to see, do I need to own a building? Do I need to buy the real estate that my pharmacy is in? You have to do those due diligence we said earlier. You need to look at, is it a seller interested in selling his building? Because it sucks when you put all those improvements, you put the drive-through, you add your compounding, you add those equipment, you do those stereo compounding, and then all of a sudden the seller sold this building and you're like, you have 6 months to vacate because, I already sold the building. So you're going to have to really push yourself, having those early conversations, right? I usually tell our pharmacists or healthcare in general, like, hey, you need to build your team. You need to find lenders. You need to find your local lenders. You have to find the pharmacy, that's the lenders that actually work with pharmacies like Live Oak. Build that those team, right? Your lender, your CPA, your lawyer. And once you have those team, then start going out, having those conversations with your landlord, right? And some people say, hey, I don't have enough money to put down payment. That's fine. Talk to your landlord. See if there's always room to negotiate, always room to be open and creative, right? Financially. So let's say if you have that building and you already bought that building. Now the benefit to me was it's just diversification, right? Now I don't have to depend on my pharmacy income. Now I have a real estate that, even though my pharmacy is paying rent, but that income, it's a passive income to me, right? So diversification is number one. And the tax benefit, now let's talk about depreciation. I can depreciate this asset for 28 years, or commercially, commercial it's 28, or could be 39 years old, 39, 39 years. So there's that depreciation, that you can depreciate the asset, and there's even this bonus depreciation from Trump tax, that we can deduct up to 80% of the real estate. So they look at the equipment on that building, and then they depreciate those in a shorter term than 30 years or 39 years, right? So the benefit of the tax, and then your interest, the mortgage interest, you can deduct. So like all those tax benefit that you have as a real estate investor, it's great. And then you can use that asset. I was talking to you guys in one of the webinars a couple months ago, where I used the real estate that my pharmacy is to use as an asset to have a line of credit. So you can use that as a line of credit. You can use that building that you have as another asset to go buy other buildings. So there's so many stuff you can do. Of course, you have to be manage your risk and don't be too leveraged, but you can use your building for so many other things versus just paying your mortgage. You can use that as your asset, line of credit, refinance that building, can take the extra money and go buy another one, or open your second store. So there's so many ways you can look at it.
And I mean, that's a really, I guess you touched on a few things there. Is having a team is, and just like running your pharmacy, you now have another business. So, find a lawyer that understands real estate, find, CPA who understands the real estate with regards to your pharmacy. If you start getting into multiple units of real estate, right? Well, you may want to find a CPA that understands real estate, right? And knows all the tax strategies and how to leverage dollars and et cetera. Having all those people in place. And I hear a lot of times like, well, my building isn't for sale. Well, I mean, I can tell you, I have a friend who, never thought ever that the building he was in, that they would sell, but he kept approaching this guy. And then eventually he kind of, I think, got into a health issue or what have you. And like everything changed. Well, it's been a great investment because it actually had 11 other units in it. And I mean, it was quite the thing, and it's been a great investment, but he kept that line of communication open and ended up with that property. And there's some other tax benefits in that. Don't forget that you're going to be paying yourself rent. So that lowers the income of your pharmacy.
That's right.
And then also you can do, like, when you sell the property, you could do a 1031 exchange, which is a whole nother topic. You can basically reinvest it for little tax savings. So there's all these other reasons. And like we talk about lines of credit, like banks like physical assets, right? We're fortunate enough to have Live Oak, who can do SBA loans for pharmacies because they have no assets, right? So like a pharmacy is almost purely goodwill. And, the problem with that is there's no hard asset, whereas the real estate is a hard asset, right? It is something that can be sold for value. And so, they will they may leverage it so you can go buy something else. They may, provide you a line of credit because you have that real estate, right, Greco? I mean, having real estate is, you love it when people own real estate. Because
Yeah, and I'm sorry guys. It was the strangest thing. My power in my house just completely went out. So I lost internet connection and I'm on my hotspot. So hopefully that lasts. So I apologize about that.
yeah, you're coming through good. No worries.
Yeah.
Good.
Yeah.
All right. Yeah, no, but just to answer your question, Owen, I mean, anytime you have a piece of real estate that is helping collateralize any deal, it strengthens the credit, right? I mean, that all obviously strengthens things. And so, yes, that when you're looking at doing a loan, that's a positive. I'm gonna go ahead and pause and let you guys keep talking because I feel like I missed a big portion of it. So
well, we were talking, Greco, about how you can, if you have the building, you can use that to, get a line of credit to reinvest and get another piece of property. You can, there's some tax benefits. So we went through some of the tax reasons to do it. But we were kind of just getting into the finance piece and like how this might impact your financing. And I guess, really where we see a massive impact on financing is when you're buying a pharmacy and you're also buying the real estate associated with that pharmacy, right? So I don't know if you want to go into how that can,
sure,
improve the overall cash flow of a deal in general.
Yeah, I mean, so I would say probably a majority of so I think it breaks down into two different kinds of transactions. One, I'll start with the individual owner who purchased a pharmacy, call it 2, 3, 4, 5 years ago, whatever it might be. And they have always wanted to own the piece of real estate because of many different benefits and reasons. They finally do have that opportunity to purchase it from their existing landlord. They come and they say, okay, how can I do this? How do I want to do it? And the nice thing is couple of different options through an SBA product. If you can either have, depending on the lender, but for the most part, you can have a 10% equity injection, so you finance 90% of the transaction on the loan to value, or depending on the type of situation, you can also perhaps do 100% financing on the real estate, which is going to help as well, because then you get to kind of preserve your cash. And the nice thing is through that SBA, you get a 25-year amortization with no balloon payments and a 25-year term. So it's matching amortization and term, no balloons, which is nice. And then for the interest rate, you can have a dialogue with the lender about how is that going to look out. That's the first, I would say, person or profile of an individual looking to buy.
And that's an important thing because, Claude mentioned earlier about knowing what your cash flow is. So, going back to our thing, this is an investment. So, put the real estate market aside. Like if you were paying $10,000 in rent plus triple net, and now you're paying $8,000.
Yeah.
And that you have a 25-year term, like you can predict cash flow off of that. And so like it either works or it doesn't work, right? Would you love to buy it at a lower rate? Sure. But are you going to not buy it and not save the $3,000 a month? Buy it, and if you hold it for 20 years, chances are that it will go up. It may not go up. It's like trying to time the stock market. Like you're not going to time the real estate market here.
Yeah.
Right. And so if it makes financial sense, well, then that's something you should be looking at.
Yeah. And I think some people, so in that first profile of an individual, right? One of the main drivers of why they come to us to purchase the real estate, one is because they've had a lot of ideas about how to grow the business. Maybe they want to make adjustments to it for compounding. Maybe they want to do tenant improvements for long-term care. Maybe they've always wanted to put in a drive-through, whatever the reason might be, but they've always had that tension with the landlord on being able to do so. That alleviates a lot of the things. So a lot of the times they want to say, hey, I want to buy the real estate because I want to be able to do these things and not have to have attention of the landlord to do so. And just from, and Claude, probably you can give some insight into this from the landlord's perspective. Sometimes I could understand why they maybe don't want that done, right? Because then you're kind of retrofitting the building to a very specific kind of tenant, and that can cause some issues perhaps. So that's really the first profile of the individual coming to buy.
Do you see, Greco, some people going, okay, I can't buy the building I'm in, so I'm buying the one down the street?
Yes, we actually do see that as well. So we will see that. So we will see an individual, so kind of staying in that same profile, right? Own the pharmacy for 3 to 5 years, and they've been renting, and they have these ideas for expansion, but they can't do it in the existing footprint. And so an opportunity comes up for a real estate purchase, say 2 or 3 miles from an acceptable amount of space away, a distance away from where their current business is, and they're going to buy a piece of real estate. That is something that also comes up in a profile, and you can still use that same 25-year term for it. The really interesting thing about that, and I think, Claude, you've mentioned this before in prior discussions we've had, when an owner is going to do that, so long as they are going to occupy 51% of the existing space under the SBA guidelines, we're just talking about the SBA loan product, they can then, use the remaining space for other types of tenants. And I have heard of owners who lease that out to either prescribers or to a specific kind of clinic, or maybe they're using the other space for a long-term care, and they're going full on into, true closed door long-term care instead of just a traditional combo.
Infusion, we've seen that.
Yeah, exactly.
Yeah.
And Claude, I'm sure, you can talk a lot about those experiences, both pros and cons of that. But that's the first profile. I'll just conclude on the second profile, Owen, to talk about the advantages of when you're purchasing. The second profile is the individual who's buying their first, maybe second or third, or whatever it might be, and they're also buying the real estate as part of the transaction. So it is allowed under that situation where you can buy the business assets of the pharmacy and the commercial real estate, and have working capital and finance soft costs all in one loan package, where you can then have a blended term depending on how much the real estate is occupying of the total loan project. And in that way, it kind of becomes advantage, because then they get blended terms, 12, 15, 18 years, maybe even up to 25 if the real estate takes up a majority of the use of proceeds. And that's an advantage too. People do need to consider, whenever they're purchasing the real estate, of what the long-term plan is of the pharmacy. But many individuals that I've spoken to, the nice part about it is if they ever exit out of the business and they sell the business, they can retain the real estate, and then that becomes passive income to them, to the next generation owner, if they choose to. Or if they have other exit strategies in mind too, they still have that piece of real estate, which they can then lease out to some other type of business, or perhaps sell. And then I'm sure you guys talked about the 1031 exchange, which can be leveraged, and then you buy a like type property within a certain period of time, and you save on some of the capital gains there.
Yeah,
that's kind of the two profiles of
yeah,
what we see.
That was, for you not being here, it was great, because Claude had just got done talking about like approaching your landlord and going, because a lot of people will be like, well, I don't have the cash to buy it, right? I can't come up with a 20%, because that's, with a house mortgage, you think 20%. And he's like, well, approach him. There's all kinds of ways, if you have the right advisors, your banker, your attorney, your CP, they can come up with ways to make this work. And, one of those ways is that, at times it might just be 10%, or it might be 0, depending on, or it might be 5, or it could be in between there, but there are ways to make this happen. And it can be beneficial to you in a lot of cases. And I guess, that Claude, and we primarily been talking about the pharmacy that you're in, and we've had a couple of people raise their hand. If you want to put those questions in the Q&A versus raising hands, we're we're not going to call anyone. It's just, you know, if you want to, we can't allow attendees to talk on these. Due to the technology. So if you want to put questions in the Q&A, we'll try to answer them. But Claude, you've kind of taken real estate from a pharmacy and then turned it into a whole nother business through leveraging. And I guess I think it's, you know, I know primarily we're talking about the pharmacy and owning that real estate, but I do think we should take a minute and just talk about, you know, investing outside of that and maybe provide some insight into what's happening there.
Yeah, sure. Yeah. I just, you know, coming back to what we're talking about, owning your real estate, what your pharmacy is, I just like to have a peace of mind, right? You know, just knowing that I'm doing improvement on this building and it's going to be mine. No one will come to me and say, hey, you can do this, you can do that. So that peace of mind is great to me. And then just having those different options, you know, different options. Let's say if you exit the pharmacy, you can keep the building like Greco said, and then, or you can, you know, sell it and 1031 exchange. So there's so many ways. I feel like we should, you know, I will recommend people to have those conversations with the landlord, right? Because you never know when someone is ready to sell, right? And then I wish 7, 8, 10 years ago, I could listen to this kind of webinar, right? Where they can tell me, you know, you can do SBA, there's an SBA product, there is traditional banking, there's so many different solutions for someone to go through, right? And then we have people you can call live work, they can, you know, talk to you about it. So, you know, today it's so much easy to have information that you need to really be successful. So we should, you know, they should take advantage of it. So coming back to your question about how do you branch out to do more real estate, it's you know, really studying the market, studying the niche that you want to be in. You want to be in an apartment building. We are talking about commercial mainly. So, you know, are you going to be in an apartment? Are you going to be in an office building? Office has such a bad name because of vacancy, people working from home. So just study the niche that you want to be part of, right? And for me, I'm in a healthcare. I was feeling comfortable going after Davida, Fresenius, which they do dialysis centers. So it was, you know, they are national credit tenants, and I feel comfortable. We're in the same kind of healthcare business. So, you know, I was, you know, my goal and my wife's goal, our family was always to see how can we buy a income producing property, and we can add a line of income, right? Every year we want to add a couple lines of income so that eventually we don't depend on just one, you know, pharmacy income, you know, because business goes up and down. So we challenge ourselves. We really apply Dave Ramsey.
Yeah, sure.
Matter where you know, you really budget everything that you have, and just that extra income you put down for a good use, right? So that's pretty much our journey was, you know, we save extra income we're getting from the pharmacy, extra income that we sold our residential property, we took that and start commercial. And everyone can do it. You need to study the market and study the niche, you know, where you're in, study the location you're about to go, and just look at the trend and then look and do your own criteria. Like I want to buy a triple net building that is going to be Davida or Fresenius, right? And then I know that they have a 5-10 years lease, so I'm kind of secure for the next 10 years, right? And then I'm going to get that passive income every month. I'm going to do my depreciation on that. I can do my cost segregation, so I can have a bonus depreciation that 80% I can get it back from the IRS, right? So there's so many ways you can really play at a high level if you do your homework well.
Yeah, and I think what's interesting about that is if you buy the building that you're in, your pharmacy, and it gets you some training on real estate, right?
Yes.
Because you learn who the maintenance people are. You may need to, you know, like have snow removal. You may have like repairs on the building. You may have, you'll have a lender. Like there's these various different things that set you up to go, you know, you're learning commercial real estate by owning the one that you're in. So you're taking that first step. And then also like it is diversification, right? So we talk about pharmacy. Well, what are we doing in pharmacy? We're trying to diversify right now, right? We're
Mhm.
adding compounding, we're doing point of care testing, we're looking at doing labs, we're,
Long-term care.
prescribing long-term care,
Yeah.
right? What are we doing there? We're just diversifying our revenue lines.
Mhm.
Well, the real estate is just literally another one.
Mhm.
And so, like, it's so important to look at, and like you said, we do have business ups and downs, right? Economy goes up and down, reimbursements go up and down. There's things that we can't control, but what we can control is, diversifying our businesses.
Yeah.
So, I
And
just,
Claude mentioned something too that's pretty important, is that when you're doing your research, you have to have these conversations with each lender, accountant, and things like that, because every lender, like Live Oak Bank, for example, we're very specific on the business occupied real
Yep.
estate, right?
Mhm.
That's our niche.
Mhm.
But it's not to say that if you use a lender like us, you own the building, or you own the business, you buy the building, and that's kind of your first entry point into, right? And then, as Claude's mentioning, you kind of graduate into these other types of investments in real estates. Well, there's, perhaps like a lender like us isn't a fit for that, but you need to then go out and understand, well, what lenders do loan into this
Yes.
type of transaction that I'm going to do, and how do I form a relationship with that? What's the pros
Yes.
and cons of
Yes.
that? And so there's all these types of things that you have to understand and start. But I have seen personally where, and I'm very proud of this actually, that we have helped people start, right?
Yep.
There's always, you have to have the lender that's going to start, and then you have
Mhm.
to have the lenders that are going to help you graduate. And sometimes they're the same, and sometimes they're not. But
Yeah.
we've had good experiences in helping people, purchase their first, and
Yeah.
then from there kind of graduate, and it never ends. The relationship doesn't cease, but
Yeah.
it does start with having those conversations with the people that you're going to go into the project and doing your due diligence research.
Yeah, I can't recommend that enough, right? That building relationship is so crucial. We do that in the pharmacy, right? We have relationship with our prescribers. We have relationship with our customers. We know them by name. We know their kid. We know their pet. We know their dogs, cats, right? Same thing with investment. Knowing your lender, knowing your banker, and having that relationship is so crucial, right?
Yeah.
Like for example, to be completely transparent, Live Oak was my first lender or my second lender, right? When we first 8 years ago or 6 years ago, I can't remember. So, just knowing like who's the lender, and it might be a right product for Live Oak to finance you, but just go find 2, 3, 4, and just compare, right? Compare the terms and make sure that it benefits your own goals and your own portfolio. And it's so
Yeah.
crucial, right? That
Yeah.
relationship, yeah, go ahead.
And Claude, so yeah, you're right. In that in the effort of transparency, Claude Owen had reached a point where he was
Right.
doing some different types of real estate transactions, and the product that we had weren't really a good fit for what his long-term goal was in the business. And so we had that open discussion about, okay, hey, we had a relationship in this type of business transaction, but not in this one because it's not matching your long-term goals. And that's okay. And that's where really, I think, to summarize Claude's point, is you have to be okay with having those open dialogues and understanding every single lender's niche and comfort in comparison to the project that you're looking at doing. And most of the time, the lender will be able to kind of give you a referral, and then you
Yes.
kind of go from there, and so on and so forth.
Yes, that's so
Yeah.
good. I'm sorry, on. This is my so
Yeah.
it's so good, right? So if the lender say, hey, we don't finance this kind of product, ask them, do you know anyone else? Can you give me a referral? And just don't say, okay, then I can't do this. Just continue asking the right questions, and there'll be someone else that can help you really achieve your goals. So
Yeah.
Well, I think
And
that's really. Oh, go ahead, Greg.
Sorry. Well,
Go ahead.
I would just final thing too with that is, in today's market, with regards to where some lenders might be with their commercial real estate portfolio, as you're speaking to them, it is important to ask them, hey, what is your credit appetite towards the type of project?
yes.
And then make sure that you understand what kind of terms you're getting, that are going to fit your long-term goal, because, you know, maybe if there's a balloon payment in the project, you know, that might be all right for right now, because you feel like, hey, given where the market might be, I'm going to be able to refinance this in a better space. But you also have to be careful, because think about the people who did that 3 years ago. Now they're looking at that 5-year term coming up to refinance. That may be harder to do in the next year if you are looking at the forecast of what the economy might look like from a commercial real estate standpoint, and from an occupancy rate standpoint. So all those types of things have to go in. And I always tell people this: don't be afraid to interview the bank as much as the bank is interviewing you.
Yes,
Yeah,
that's so good. Yeah.
that is really good. And I was gonna say something else, but what you just said, Greco, kind of ties into a question we had. And it said, currently I'm leasing, will be 5 years in December. Have SBA loan for the business already, looking to purchase a piece of property to build later. What do I need to know about getting a loan for a commercial property? I think you said some of that in there, but is there anything you would add to that? I mean, I assume that, you know, look, you guys are going to look at the pharmacy financials, right?
Yeah. So one thing important is that if an individual is looking to build, okay, so let's say it's like a flat piece of land and they're going to build it. We talked a little bit about the occupancy rates that are required as far as, you know, your square footage if you're buying an existing. But if you're building, there are some additional occupancy requirements that are needed. Most of the time, it's usually leading to where the pharmacy will be occupying 100% of the space within a certain period of time. So it's important to talk about to kind of keep that in mind if that's in the scope. Most of the time, what I find is pharmacy owners that are looking to build are going to occupy, you know, 100 to almost 100% of it. You know, you have to be able to have an idea about what the scope of the project might be. So let's say it's, you know, $1 million. You have to understand also a little bit about, you know, what are construction quotes in the area? What are those looking like? How's that going to impact your budget? And then, of course, to your point, Owen, have a lender look at your pharmacy financials, understand how much revenues, net profit you're building compared to the debt that you have currently, so your cash flow, to get a good idea of whether you're going to get into a, you know, projection based trend situation, or is it going to be, no, you know, I feel like, hey, I can build for currently what my rent is going to be within a relative, you know, range of acceptance. Or is it going to be, well, no, it's not, because here's what I'm actually looking at building and why, and it's going to lead to 20 or 25% more revenues in the business. And then you're kind of getting usually into more of a projection based transaction. It's always good to have a conversation with the lender about that as well.
Yeah, thanks. And what I was going to say earlier was just that networking. I think, you know, just like in pharmacy, I think, you know, a lot of pharmacy owners know other pharmacy owners, right? I mean, we all know each other. You go to these conferences, you have people you know who are other pharmacy owners. You got to do the same thing in real estate. Like, it's no other real estate owners, you know, and network within your local community, you know, talk to Greco, because like he said, he may be able to do the loan, he may not, but you know, he's in the banking industry and pharmacy. He knows people.
Yeah.
Like, I mean, these are small communities. People know each other. And you know, they're really out there to help you and try to increase your investment. So it is all about just making a goal and getting the right people around you, because it gets a lot easier when you do that. And we had one other question. Yeah, go ahead, Greco.
Oh, one other thing too, people need to remember is that, you know, when you're looking at using the SBA program to purchase a real estate, there's really two types. There's the 7A and then there's the 504. And I think sometimes those get kind of intertwined, but it is important to understand that there are two different products, pros and cons to both of them. And you know, make sure that you're having that conversation too with a lender, be it Live Oak Bank if you're talking to them, or any other type of lender too that might be pursuing more of an SBA financing.
Yep, yeah, that's a good point. So we had another question. I've purchased my first strip center in which my pharmacy is located. just made the one first payment. I want to know about the tax advantages I have with both pharmacy business and real estate business. I mean, Claude mentioned a few of the big ones: depreciation, interest, the 80%
Bonus depreciation.
bonus depreciation. Those are, I mean, those are the big ones. Obviously, you can also, you know, create income back to the mortgage company, which lowers income for the pharmacy and maybe makes the real estate break even. So now you're not paying as much income taxes. It does get a little complicated because each individual situation is a little bit different.
Yeah.
And so you need to look at the global businesses together and try to figure out, because, you know, most tax work is not avoiding taxes. It's either taking the tax now or deferring taxes. So, you know, we have to kind of look at your strategy and go, which is the best. So, I mean, those are big ones that we know that you can get without having to look at anything. Everything else, you probably want to consult a CPA and have them look at your global tax situation to see what you could take advantage of now, or maybe you shouldn't take advantage of them as well. So there's a lot to consider there, and I highly recommend do tax planning every year. You know, start in the fall and really sit down with, I think a lot of people don't sit down with their CPA and have a conversation about all of this. They just kind of get into tax season and they're like, well, what do I owe?
Yeah.
And you can do tax planning both in the short and long term. And that's probably the big thing I would suggest to you.
Yeah. I'm always tell people, look at your exit strategy. What's your exit strategy, right? Is it in 5 years? Is it in 10 years? Is it keeping it to pass on to your kids? So look at those exit strategy, then, you know, whatever tax strategy will align with your exit, you know.
Yeah, because if some people take tax, do some tax moves, but then turn around and have to pay that tax in 3 years when they sell. So it's really important to understand I mean, you can't predict everything, but, you know, okay, what are my goals? When am I going to be here? Because, you know, you don't want to defer that tax and then just turn around and do it when you sell. Now you might want to, in order to, you know, conserve cash and get cash now. So, but you really need to talk to a CPA. That's what they're here for.
For sure.
So I think we've covered a lot here. So thank you, Greco. Thank you, Claude.
Yeah, thanks.
Thanks all that are listening. And I think if you guys got anything else to add or any last comments.
No, I mean, I think this has been great. You know, I know for independent pharmacy owners, owning the real estate is always an option. It's always good to pursue that. One last thing I think I'll point out, which we don't talk a lot about, is, you know, we're always talking about on the front end of doing the purchasing of the property. It is important to understand what might be required as far as title, environmental, appraisals, things like that could happen more on the back end of a transaction. So make sure that everybody, when you're talking to the lender on the front end, you have some of those ideas about what might be required. Because just for example, let's say the property was at one time a gas station, or one time like a laundromat or something that could have some type of environmental impact, where if you're doing a financing through a bank, it's going to impact that bank's ability to collateralize that property, because it may have some environmental issues to it. That's important to understand. And even if you don't use a bank, make sure that you're asking those questions to the seller, so that if you do, like, let's say seller financing with the property, you pay the property off and it's yours. To Claude's point about an exit strategy, what if you go around to sell that to somebody else at one time that could come back and get you? So it's always important to understand those types of things.
Yeah.
That's
good. Yeah.
Yeah, it's really good. And we got a question. What's the name of the podcast you host, Claude?
It's called RX Investor.
I'll put it in the chat.
Okay.
RX Investor.
I was gonna just add like a few points before we close. So I'll just encourage people to to start building relationship with your lender, relationship with your CPA, your lawyer, right? And then push them to diversify in different things like, LTC, testing and lab, sterile compounding, and real estate. Just diversify is the key, so you don't depend on one income. And then don't be shy to ask questions. Don't be shy to reach out to Greg or Owen and ask questions. And if they don't have an answer, hopefully they'll send you to someone that has an answer. But pharmacists, we always tend to be shy. Let's ask questions, and and there's so many solutions. There's so many tools, right? It could be creative financing. It could be seller financing. It could be bank, traditional SPA. So, yeah.
Yep. No, you're absolutely right. That, just having people on your team is you can't do it all yourself. You're already running a pharmacy here.
Yeah.
So, find people that can help you. So we put everyone's contact info, and I put a link to your podcast, Greco's email in here. So if you do have questions, like, reach out. We're happy to talk to you and talk through these things. That's why we do this. So thanks everyone for joining. Thanks again, Claude, Greco. And
Thank you, Owen. Thanks, Claude. Thanks, everybody.
Thank you.
Bye-bye.
Have a great rest of the week.
You too. Bye-bye.
Bye.